Good evening, ladies and gentlemen. I'm Hassan Damiria, Manager Corporate Finance and Strategy. On behalf of my team, I would like to welcome all of you for Sunshine Holdings' third quarter results webinar for FY25. So to start things off, a few housekeeping announcements. So as usual, this webinar will be recorded, then later uploaded to our IR website, as well as the CSC website, along with this investor presentation. And you can use the link in the screen to access these documents. So all participants will be muted upon entry. And during the Q&A session, you can use the raise hand option to ask questions, or you can use the chat box function to type in your questions as well. So similar to previous quarters, we'll start the presentation with corporate announcements. Then we'll move on to the group highlights for the quarter. And then we'll deep dive into each of the business segments by the respective business heads to walk you through what has happened during the quarter. And then we'll end the presentation with a Q&A session. Yeah. So let me first introduce my team. So we have Mr. Shyam Sathasiva, who is the Group CEO of Sunshine Holdings PLC. Mr. Arnaditya Kumar, Group CFO, Sunshine Holdings PLC. Mr. Hiram Samarasinghe, Chief Growth Officer, Sunshine Holdings PLC. And from the respective businesses, we have Mr. Shantha Bandara, CEO of Sunshine Pharmaceuticals and HealthGuard Infinity. And then we have Dr. Thiru Sayandan, CEO of Sunshine Medical Devices and Lina Manufacturing. Mr. Farman Nizar, COO of HealthGuard Pharmacies. And on the consumer side, we have Mr. Anuruddha Advikare, CEO of Consumer Brands. And then lastly, on the export side of things, we have Mr. Sanjeeva Sarnapala, who is the CEO of Sunshine Teeth. So let me start off with some of the corporate announcements for the quarter. First off, to improve liquidity and accessibility to our investors, so the company has decided a share split for both Sunshine and Waterwala. So yesterday, the shareholders of Sunshine has approved the share split of one ordinary share into 4 ordinary shares. So with that, the total share count, which was around 492, will go up to around 1.9 billion. So with that, with the CST listing rules, the share will be on a trading suspension starting today for 7 days up until February 18th. And the share will resume trade on the 19th of February. So similar to Sunshine, Waterwala Plantation also has proposed a share split of every 1 ordinary share into 5 ordinary shares, which is to be taken up on the EGM, which is set to be scheduled for 20th February. So similar to Sunshine, the trading will be suspended for 7 days, starting from 21st of February up until 28th. And the share will resume trading on the 3rd of March. So on other corporate announcements, Sunshine Holdings has restructured its consumer segment by transferring the 100% ownership of Sunshine Tea into Sunshine Consumer Lanka Limited. So the aim behind this move is to kind of simplify the legal structure of the consumer segment and consolidate everything under one entity, similar to our healthcare business. So post-transfer, Sunshine Tea will be a 100% owned subsidiary of Sunshine Consumer Lanka, which in return will be a 100% owned subsidiary of Sunshine Holdings PLC. So with that, I'd like to hand over to Shyam Sathasivam to take you through the group highlights for the quarter.
Thank you, Sandha, and good evening to everyone. Thank you for joining us for our third quarter earnings presentation. Just to take you through the earnings for the group, we've had some growth in our top line, 15 billion for the third quarter, driven by our healthcare sector, which has had a 20% growth towards the third quarter last year. This is driven primarily by growth in our Lina Manufacturing business. In consumer, we've had a dip. It's constituted about 30% of our total sales. We've had a bit in the drop in consumer sector revenue, similarly with agri. As the teams explain the sub-details, you'll hear more about each of the sectors. Overall, what we've driven for is to maintain our high return on capital and return on equity. We've had good earnings overall for the quarter. Primarily, EBIT has had growth. We've had some dip in our overall PAT. This is driven by the tax impact on our agri. We've had some impact in consumer as well, and I'll take you through some of that. Market cap has since moved since our last call with all of you. We have done better than the overall index, and so we continue to see sort of shareholder wealth creation for Sunshine. If I take you through more details, our EBIT, as I said, has grown. Our PAT has been broadly flat to negative. This is an impact of the tax impact in our agribusiness, whatever plantations, and that's something that will get dialed in. This is the first year of full tax in that business. We've had some challenges in consumer in terms of top line, but also in terms of GP. Again, this is due to us absorbing the VAT that was imposed since January last year. And as you go into Q4, that should normalize from where things are. So between the two of that, we've had some impact. But broadly, flat and continuing that trend. If I give you the breakup thereafter of where things have moved, as I've said, healthcare has had significant movement in revenue growth, and that has driven EBIT growth. Consumers had impact in both revenue and in EBIT as well. Agri has managed to increase EBIT, but has had a tax impact. Broadly, as you can see, healthcare continues to dominate revenues, followed by the consumer and then our agri sector. I will hand over to our colleagues in each of the sectors, starting with Shanta Bandara for our healthcare sector.
Thank you, Shyam. Let me quickly take you through the healthcare sector, as Shyam has already alluded to the 20% growth in the quarter. It has been a good quarter, as mentioned, and mainly contributed by Lina, our manufacturing arm, and also supported by the pharmaceutical agency business. And overall, the entire mix has given us a very positive EBIT margin of 19.8%, year-on-year growth of 170 basis points. The overall revenues and EBIT looks quite positive for the quarter reported. Moving on to the individual segments, let me take you through the pharmaceutical segment. The pharmaceutical business for the quarter had a growth of 10.5% against last year. The important thing is that the business has started volume growth. It has started giving volume growth, which you may recall that was a flat market. However, we were doing better in the private market. And the IQVIA Q3 results in terms of market shows a 1.2% growth overall. That is MAT 2024 Q3 data, which is the latest from the research organization IQVIA. However, we see that we are growing much higher than the market and also seeing volume growth in the business. So that's a quick highlight on the pharmaceutical segment. Moving on to the distribution arm of the sector, which is our HealthGuard distribution business, which also comprises of more clients that we have opened up our services to new clients. We are signing up with new clients. It's very positive that the concept has picked up, and it has given a revenue growth of 32% year on year. And again, very positive volume growth of almost 18% for the YTD 9 months, and also quarter being significantly high than the previous quarters. So with that result, I would hand over to Sandhan to take you through the medical devices and Lina. Sandhan, over to you.
Thank you, Shanta. So ladies and gentlemen, if I take you through the performance of Sunshine Medical Devices, we had an excellent third quarter results going about 1.4 billion. Where on quarter, it's an increased performance, and even YTD, we perform well on budgets. One of the main reasons for this high performance, we continue to do business with the private sector and the government sector. And one of the significant features of the medical devices had been the volume dip what we had in the past year, especially in the private sector. For big agencies like Johnson & Johnson and 3M, we started regaining market share. So we slowly and steadily are gaining volume share, which helps us to regain the business, while our diagnostic big businesses like Siemens and GE continue to perform, which helps us to put up a good score in the third quarter, resulting in a YTD business. So while we had maintained momentum in the medical devices, if you take us through the pharma manufacturing, which is our leaner manufacturing, we had once again, an excellent quarter, mainly contributed from the government supply. And if you compare over the last year, we have basically doubled the revenue here by fulfilling the government orders, which are meant for calendar year. So this has been the main success of the leaner manufacturing, where we increased our capacity of the meter dose inhaler, being the monopoly market in Sri Lanka, being the only supplier of meter dose device to the government sector. And now we are focusing to improve our contract manufacturing and also our own brands in the private market for Way Forward initiative. With this, I'll hand it over to my colleague Farman to take you through HealthGuard Retail. Over to you, Farman.
Thank you, Sayandan. Good evening, everybody. HealthGuard, you can see, finished Q3 very successfully, closing 700 million in a market that is broadly flat. Year to date, Matt, like Shanta said, 1.2% growth. We have actually had a 16% growth. So we are very happy to have sustained growth over the last 3 quarters. We expect to keep the momentum for Q4 as well. This growth was driven both by wellness and pharmaceutical, predominantly pharmaceutical growth. And this is without any opening of new outlets. We have fixed 15 outlets at the moment. So this is pure organic growth. 9 out of 10 outlets actually performed up to expectations to actually lead this growth for this quarter. For Q4, we have promised that the growth will actually be slightly above Q3. And we hope to continue with some of the initiatives that we are planning internally, both with our customers and with our supplier stakeholders. A point that I like to mention, in the table below, you could see, apart from revenue on the top, the bill count drop is a reflection of the temporary setback that we are facing in the market. However, we've managed to heighten sale because by improving basket value. That is one thing which is in our control. Sometimes you can't control the number of people who walk into your store, but in terms of influencing for improved basket value purchases and ensuring that we have a good selection of the available products, we've been able to maintain this performance. So with that, I will try to hand over now to the consumer business, to Anuruddha.
Anuruddha, you're on mute.
Sorry about it. Thank you, Farman, and good evening, everyone. So let me take you all through the consumer sector highlight, which comprise export and consumer brands. So as you can see, overall, we have recorded negative revenue of 8%. This is mainly coming from the VAT impact that was imposed in Q4 last year, Q4 last year, January. So third quarter of last year was a very heavy quarter in terms of retail sales, especially because the VAT impose came in 1st of January, so that the traders start buying, especially modern trade and all that, and stocking up in third quarter. Hence, there was a dip in fourth quarter, same quarter in this year. And also the 18% VAT impact is reflecting in revenue achievement in the last quarter, the third quarter. So I will talk about the consumer tea and confectionery and then hand it over to Sanjeev for export. Moving on. Next slide, please. Yeah, so moving on to tea business, again, you can see the revenue impact of 19.3%. Of this 19.3% revenue impact, 18% is directly coming from the VAT. It was from 0 to 18% on tea. So that is reflecting here. And you can see in terms of growth, there is a volume growth in tea segment. Despite all the challenges. And also there is an impact of currency exchange as well. However, you can see the market share, even though this is mentioned as 48.7 as an average of Q3 market share, exit Q3, which is December, we have recorded 49.3% market share without modern trade and SMMT. So including modern trade and SMMT, if you look at it, we are over 50% market share in the branded tea category. Talking about confectionery, yes, we had a bad quarter, especially in the Q3. Confectionery recording 46% decline. This is mainly coming from some of the trade term corrections that we have taken in the month of October, which is first month of Q3. We took some terms of trade corrections, which needs to have the consistent business. So therefore, we took that correction. Plus, it was the political challenges also was there in the Q3, which basically was focused on essentials, and therefore there was a minor effect from that also for confectionery in the Q3. However, the trends after now Q3 first month was heavily impacted with the terms of trade amendments, but second month, third month we settled in, and you can see in the next quarter when it comes to next quarter discussion, you can see how we are maintaining from there onwards. So the impact is basically coming in the month of October for the entire quarter. So with that, I will now hand it over to Sanjeeva for export sector presentation.
Thank you, Anuruddha. Good evening, ladies and gentlemen. Let me present to you an overview of our export business performance for the third quarter. In terms of volume, during this period, we exported nearly 900,000 kilos of tea, representing a 44% year-on-year growth. This strong performance was primarily driven by an increased demand in some of our key markets, the Middle East, United States, and Europe, where the value-added products, including tea bags, tin caddies, and souvenir gift items, have gained significant traction. Our Far East market, with a key focus on China, also performed well, recording a 22% increase in demand compared to the same quarter last year. Looking ahead, we anticipate a moderate decline in demand in the next quarter due to the impact of the Chinese New Year holidays and the lead up to Ramadan in the Middle East, which may temporarily affect buying patterns in these regions. In terms of revenue performance, for the third quarter, we achieved 1.9 billion in revenue, reflecting a 37% year-on-year growth. This increase is particularly commendable given the appreciation of the rupee, which had the potential to affect earnings but did not hinder our overall financial performance. In summary, our business has demonstrated a strong year-on-year growth in both volume and revenue, reinforcing our market position and the effectiveness of our strategic initiatives. Thank you. I'll pass it on to Hiran now for Agri.
Good evening, everyone. Let me take you through the agri sector results. I think watermelon plantation results were released mid last week, so I think most of you would have had the chance to go through the numbers and analyze the performance. I'll specifically come into the tax, which is the overall company. As Shah mentioned, our effective tax rate from 3Q last year to 3Q this year has gone up from 7% to 30%. This is specifically because agribusiness, agriculture was zero rated before, and that has gone up to 30%. And also agri processing, which was at a preferential rate of 14%, has now gone up to 30%. So effectively, now everything is at 30%. So hence the hit on the PAT. Where are the consolidated results? Let me give you more color on the palm oil and the dairy segment separately. In palm oil, I think revenue-wise, we are almost flat, about 1.2% degrowth compared to the same quarter last year. This degrowth is stemming from the reduction in volumes. Our volumes have been down 15% year on year for 3Q. Mainly because of some planned maintenance activity at our mill, and also a reduction in board crop because our mill was closed, so we didn't take that input in. But we have been able to catch up in terms of selling price. Selling price is up 4%. We are currently averaging about 427 rupees per kilo compared to 411 rupees a kilo on the same quarter last year. So that has also increased our margin from about 35% last year to 45% this year. Apart from that, there is also impact from fertilizer. We have improved the efficiency of application, and that is also trickling into the margin improvement. Let me move to dairy. Dairy has witnessed a challenging quarter in 3Q with revenue year on year down about 25%. This is mainly stemming from the volume, although price is also down. I'll come to that, but mainly stemming from the volume. Same quarter last year, we produced and sold about 1.5 million liters. But compared to that, this quarter, we were only able to produce 1.3. And the reason behind this is the reduction in milking herd. We have done some changes to the herd and removed some unproductive cows. So number of milking cows have come down from about 820 same quarter last year to currently about 720 average. So that about 100 cows less producing milk this quarter. Moving on to the price, I think price has also dropped 13%, as you can see. Currently, we are at around 229 to 130 rupees a liter. Compared to same quarter last year, we were at 262. So that's the description of the performance of the agri businesses. So I think we'll move on to Q&A.
So thank you, team, for the detailed insights and highlights of each business unit. So with that, like Jan said, we can move into the Q&A session. So as I mentioned in the start, you can use the raise hand option and I'll unmute. You can ask your questions, or you can use the chat box function to type in your questions as well. First question from Tarushi. Sandan, I think this will be for you. As you mentioned, the full MDI demand by the government has been fulfilled by Lena. Sun has indicated that Lena is planning to increase further capacity with the IFC infusion. How will this excess supply will be absorbed? And is it via the private sector?
So there are multiple initiatives. So one is fulfilling the current demand. The way forward, the MDIs are on the growth. So there'll be an increased capacity from the government itself. A. B, we also want to scale up in the private sector. And also we are looking at contract manufacturing, which will also increase the demand. And to further conclude on the question, we are also enhancing our tablet line so that we go on a fully fledged tablet lines as well. And all these need investment where we'll be utilizing the funds.
Tarushi, I hope that answers your question. A question from Kavi. With the palm oil processing mill operating at approximately 40 to 50% capacity, we can assume that if the palm oil ban is lifted, Vata will replant oil plant to achieve around 80 to 90% capacity utilization.
Let me take that question. At this point in time, I think that it's a question of the mill has a capacity of 400 metric tons. We generally average about 300 metric tons. I think so there is some room for growth, and that can come even from board crop. We have no plans for replanting, etc. at this point in time, because as is current government policy doesn't allow for it. Growth will come from efficiency improvements and maybe additional shift, etc. And accordingly also in any capital investment as per necessary. But all of this depends on government policy on replanting first.
Kavin, hope that answers your question. On your next question, what is the average fertilizer cost per hectare? We don't have the exact numbers with us right now, but we'll get you the exact information after the webinar. Question from Tarushi. Consumer sentiment has shown recovery in the broader market. Is this the premium brand sectors still showing volume decline, or are you seeing any improvements? So Anuruddha, maybe you can take this.
Can you repeat the last bit of it, Shanta?
Yeah, I will repeat the question. Consumer sentiment has shown recovery in the broader market. Is this the premium brand sector still showing volume decline, or are you seeing any improvement?
Yes. To answer in that question, yes, consumer sentiment has improvements. There is improvement seen, but this is not for high value money SKUs, especially Sesta is still in challenge in terms of price for a high value price segment. So we can see our own numbers, the whatever and value for money segment is improving over the high value segment. So Sesta, I would say, is still at a challenge, but we are doing to increase the more equity and then thereby retain our current market share and the customer base.
Question from Metin. Does Vata currently procure fresh FFBs from the smallholders?
Yeah, we do some. There's not that many smallholders overall in oil palm. We have a few suppliers from the region for fresh fruit bunches, so we continue to accept it.
One more question from Kavi. Out of the current oil palm extent, how many hectares of oil palm have reached the replanting stage?
So broadly from our 3,300 hectares or so, about 800, 900 hectares are due for replanting and have since been delayed because of the ban.
Follow-up question on that same line. Under normalized conditions, at what age do you initiate the replanting of an oil palm tree?
Broadly around 25 years would be ideal for us to replant. That's when sort of productivity dips.
Another question from Metin. What is the global palm benchmark futures contract? What are references when determining the pricing of its palm oil sales?
Primarily on the Malaysian futures is what our reference prices. And then, of course, there's the duty component, etc., domestically.
Question from Isuri. I think, Shanta, you can maybe take this up. How sensitive is the healthcare segment EBIT margin for a 1% appreciation of the LKR?
Shanta,
It's mainly, thank you, Hasanda. I got the question. It's mainly not the healthcare sector. I can tell you pharma business. Mainly, if you look at a 1 rupee would have a sensitivity closer to a 3 million, right? So that's the sensitivity that we have in the pharma only. So when we put the entire imports with medical devices, it's a little bit higher.
Thank you, Shanta. Another question from Dinakara on what are the possibilities of lifting the palm oil ban?
Yeah, right. As of now, we have not received any positive indication. So we're engaging. We're part of the Palm Oil Industry Association. We're engaging with the new plantation minister, etc., showing data, asking them to review all things impact related. It's a work in progress.
Follow up on that. What is the impact of the daily wage hike on the direct cost of agribusiness?
So wages will have broadly a 25%, 30% impact because we have other inputs as well in the whole sort of agri inputs. So wages has a 25 to 30% impact.
Thank you, Chan. Sandra, maybe you can take this up. Question from Tarushi. How is the stance on the new government on buybacks? Do you see pricing and volume continuing as usual?
So the policy on the buyback is government has asked for the expression of interest from all local manufacturing of whatever the products or molecules made in Sri Lanka. Based on same, the government, whatever produced in Sri Lanka, for whatever the government purchases, they are purchasing A. And instead of the buyback, they are signing up agreement for a year. For all the manufacturers' expression of interest, the government is signing a 1 year. The Ministry of Health is signing a 1 year agreement to purchase same for the year. With regard to pricing, there is a flat 8% decrease for the year 2025 for all the molecules purchased by the government, where they feel it's due to the main reason of the rupee appreciation against the dollar. I hope I have answered both the questions.
Thank you, sir. One more question on Dina manufacturing from Sajid. What is the expectation for the capacity utilization at Lina manufacturing facility for the upcoming quarters?
So we expect the same trend to continue in this year as well. So MDI is almost at 100%. We are going at about 98%. The capsule line is going at about 60% and the tablet around 58%. So we'll maintain similar momentum and capacity utilization in the coming year as well.
Thank you, sir. Shyam, one more question on the water side from Dinakara. If the ban on palm oil is not lifted in the foreseeable future, what are the future plans for the affected land? Is there any strategy to repurpose the palm oil land for cinnamon cultivation?
So at this point, we haven't had any repurposed plan. I think it will be a question of lower productivity as it ages in the medium term. It's more as cinnamon has been in other unproductive lands, etc., or things that were cleared before, that is unproductive or unviable rubber that was cleared but not planted. Palm oil is what we've switched to cinnamon. But yeah, otherwise it's more about managing with lower productivity in palm oil as it ages significantly.
Thank you, Sean. Question from Taroshi. Could you give some insights on future plans to navigate the headwinds in the confectionery segment? Anuruddha, maybe you can take this up.
Yeah. So in terms of future plans, now I would say the sales force structure is very much settled now. So we have adequate field sales team in place and the distributor operation in place. There we have to do some basic fundamentals improvement in terms of field execution. In terms of portfolio, we have already done some corrections to jujubes, wafers, snacks, chewies and chocolates in terms of reformulation and also giving better look and feel. Some of it are already hit the market already, and others are on the way to hit the market within upcoming months and quarter. Wafer, snacks and other packaging we have changed again to improve the look and feel by ensuring the original identity of Dainty remains there. And also we have brought in some of the old very popular communications. The Dainty Rasapana was one of the very famous radio TV activity that back then when Dainty was handling. So we have come back with that, and that is on air from every Saturday, week before last Saturday onwards. And also we are planning some new innovation within the confectionery. Lollipop is the fastest growing category. In that we are doing lots of innovation in terms of new format, new pack size, and also flavors. And My Lady, there was a toffee, a famous toffee back then at a higher grammage. We call it My Lady Super. We are planning to bring that back as well. Apart from all that, we have a couple of other plans for new brands as new SKUs as well for the category. So all in all, we are set in terms of structure, set in terms of price comparison, and also set with the innovation renovation pipeline. Hope I have answered.
A few more questions for you, Anuruddha. From Missouri, one is what mainly caused the quarter-on-quarter and year-over-year dip in Dainty revenue. I think you broadly covered this. There's another part of it. Do you expect the decline to continue into the March quarter as well?
So last quarter, in the sense the quarter 4, we are expecting a growth over quarter 3. Definitely, one is that whatever the changes we have done in quarter 3. So the biggest change is terms of trade. We had to revise the terms of trade, and that impacted in the month of October. As I said, early November, December onwards, I can see things are settling in now. And also field execution level, we have introduced lots of like these disciplines into the system, where that also I can see paying off results as we speak. So therefore, quarter 4, we are expecting better results than quarter 3.
Thanks. One more question to you, Anuruddha. So from Sajid, did the selling prices for tea not change to reflect the VAT impact?
So we initially, management decided not to pass the VAT impact to the consumer shopper. So therefore, for one good quarter, we didn't do anything. And then in the first quarter of current financial year that we are in, we took a price increase of 6% across all the tea brands SKUs. But then value for money segment, which is Rasakahara segment, we realized that it is not still affordable from the shopper point of view. And we revised that for a temporary period. We managed to continue with the temporary price off. And then towards third quarter, we took a permanent price reduction for run cart as well. So that current price, I don't say that we have done a sort of significant coverage from the VAT impact. If at all, it's about around 4 to 5% coverage. We have not done anything more than that.
Thank you, Anuruddha. Kavin, on your question on the normalized annual income from the RSPO credit sales, we don't have the exact numbers with us at the moment, but after the webinar, we'll get you the required answers to this question as well. One question from Isuri. What contributed to the increase in the dairy segment gross profit and the EBIT margin?
Sure. Let me take that, Isuri. If you look at EBIT margin, this quarter has been 12.8 compared to second quarter, just the previous quarter, 0.3. I think that was a special adjustment. We revalued our biological assets, and that hit has taken place during the second quarter. That's why it's 0.3, and now we are at 12.8. But if you look at year on year, compared to the same quarter last year, which was 18.6, now is 12.8. That is, again, as I explained, due to the reduction in liters as well as price.
Thank you. So if there's no further question, we can wrap up the session for today. On behalf of Sunshine Holdings PLC, I would like to thank all of you who joined this quarter's webinar, and I hope to see you all again in our next quarter webinar as well. Thank you and have a nice day.
Thank you.